by sharing a screen and saying thank you once again, guys, to the Trading Pit. Thank you again, guys, for having us present. Now, let me move my little camera across the screen here just to make sure we're in the right spot. Guys, I'm going to do a quick sound check. Let me grab the chat function down here. So I hope everybody is really, really well. Guys, we'll do a quick sound check. So can I check that the sound is good? Guys, can I also check, please, if possible? I'll just make sure that everybody can chat to everybody so you can guys chat and see everybody's questions and similar things. So our sound should be good. Ahmed, how are you? I hope you're fantastic. And Ahmed, Louis, how are you? I hope you're brilliant. And hello, Ian. Perfect, super. And really important, guys, really important. Can I check that my camera is not covering the logos or the information on the screen? Are we in the right spot? I hope you're brilliant. Dave, how are you? I hope you're fantastic. Now, young Remy, great to see you in the webinar. We're good. Okay, well, look at this. Looks super. Mandy, how are you? So, guys, hello from everyone. So hello from everyone in Dora, guys. Hello also to, again, guys, thanks for the Trading Pit for having us on board. Guys, this is a 9-part webinar series. Guys, tonight we are going to be doing stair stepping. As the intent behind the webinar is to teach everybody, guys, how to get started as a professional day trader. Now, I'm going to be going into the live charts tonight, guys, to talk about what we did in the live trading room, ultimately why we did it. We're going to be doing that, guys, because it's a really, really great sort of way to say, hey, this is what we're looking in the market, which is stair stepping. So the webinar, is all about stair step tonight. This is what we're looking at in the webinar, and this is actually how it unfolded in the live charts today. Right now, I really like presenting off live charts. As the reason being is anyone in the world can probably go back 4 or 5 weeks and find you an absolutely stunning trade. What I would prefer is show you the live charts tonight and make sure you walk away from the webinar as not only informed about what we do, why we do it, how we do it, but walking away sort of thinking, you know what, if I was really, really good at trading this market today, I could have walked away with maybe 200, 300, 400, even 500 US dollars. And that does bring up a great point. So first point for the webinar, if I can, I'd love to find out, because we normally target around about 6 or 7 countries in these webinars. And guys, the numbers are growing. We got to 7 countries last time. So guys, I'd love to find out where you're from, guys, and I'd also love, if it's possible, give me a daily goal. Like give me a $200 per day, $300 per day. Exactly how much money, guys, would you like to have made trading the NASDAQ in the live trading room this afternoon? Now, couple of complicated questions there. 200 US, brilliant. Ali, you've made my job very, very straightforward. I appreciate that. Ahmed, you're on 100. Suzanne, Aussie via Sweden. Hello, Suzanne, 220. All right, so 220. As I asked that question because I've had the privilege of sort of speaking all around the world. Remy, Western Australia, 150, perfect. As I've had the opportunity to speak all over the world, certainly before COVID, because after COVID, everything seems to have gone online. And I was just joking before about how it's really good fun, guys. It's really good fun to stay online as opposed to flying all over the place and talking. But wherever I go, guys, wherever I work, so Lee, you walked away with more than 500 bucks tonight. So that's perfect. The reason I say that is that in the game of trading, if you can make $200 per day, that's a really, really great little target to first start. If you can make between $100 and $200 per day, in 6 to 9 months' time, you can plan on that to have doubled or tripled. And again, we've known people saying, hey, Lockie, I'd love to be around. So Dave is around $2,000 a day. All right, but he's still, this is good, guys. This is great. So guys, let me read this. My goal is $200 per day, but I'm struggling to get 100. Now, interesting point, and New South Wales, fantastic. Ray, how are you? Hope you're brilliant. That is a great observation, guys. So I want $2,000 a day, but I'm struggling to get 100. Now, if anyone is out there in the world, it doesn't matter where you are, if you're anyone out there in the world and you're struggling to be consistent as a trader, then what I'm going to be running through tonight is not only really, really valuable, but what I would suggest to every single one of you, if you want to be really consistent as a trader, then you're going to wait for the candle to close and then take your trade. Now, this goes for every discipline. It can be, you can trade Forex, guys, CFDs, options. I'm a futures trader. I'm a futures trader. I'm a big fan of futures trading. So tonight, guys, what we'll do is we'll run through stair step. So we'll run through stair step. And then what I'm going to do is talk about if you had have entered these trades after the candle closed, this is how you would have handled yourselves in the charts tonight. So guys, we can actually sort of like kill two birds with one stone. Teach a stair step, show you what we did in the LTR, and then talk about literally waiting for the candle to close, interpreting what that candle means, and then taking the trade. So that could actually work out really, really well for everybody. And we'll work at that goal. Let's work at the goal of $200 to $500, and we'll see how we go. Nathaniel, how are you? I hope you're really, really well. So guys, we're expecting tonight, guys, around about 40 to 45 traders in the webinar. Now, as TTP said, guys, earlier, this will be put on the YouTube, guys, the YouTube channel for the trading pit. So if you do want to run through this video again, guys, if I do something or I draw something, you're like, hey, I'm not 100% clear with that, guys, please do ask questions. Really, really important. Flip side, you will be able to watch the recording, guys, on YouTube as well. And eventually, if you are on YouTube, guys, if you are watching this recording on YouTube in maybe 2 days or 2 weeks or 2 months, please do understand that everything that we do is very, very simple and mechanical and very much on purpose. So guys, webinar two, we're going to be doing stair stepping in the market. The reason we're going to focus on stair stepping is combined with webinar number one, which we did on candlestick analysis. What we're going to do with stair step, guys, is every single trend trade you're ever going to get and every single continuation style trade is always going to be with the step. And the beauty of that is every single reversal is going to be against the step. So right at the start of the webinar, guys, I'm going to target 4 key, if you don't mind me using the expression KPIs, I'm going to target 4 key KPIs tonight, which is basically how to draw the step. So once we've drawn the step, we can determine who owns the step. Then we can actually say, right, for example, if the buyers own the stair step, now I'm looking for a selling-based reversal or a trend-based continuation style trade. So I don't mind joining the buyers when they're strong, but if those buyers fail, I'm going to join them and I'm going to be sending them back the other way, obviously joining the sellers. So the 4 KPIs, guys, for tonight, and basically, how do I draw the step? Who owns the stair step? Why is the stair step important? But ultimately, how do you trade to take advantage of it? Now, every single trade, guys, we took in the live trading room today was 100% as per what I'm going to be teaching you tonight. So on the NASDAQ, as there were 5 trades up for grabs, depending on how much risk you're allowed to trade. Every one of those trades did what they were required to do. There were a couple of mistakes, guys, that could have been made today. So if I've got time towards the end of the webinar, I'll also run you through the mistakes, right? What not to do if you want to trade the European Open, or the US Open or US Close, but what not to do if you want to avoid the losing trades. Now, guys, because we are going to be covering futures tonight, guys, I will also be mentioning CFDs and to a degree Forex. Guys, I was trading Forex until around 2007, guys, when I discovered futures trading, and then I became a massive fan of futures, and here we are. But either way, guys, I do have to mention, because we are going across multiple jurisdictions today, not only for the trading pit, guys, but also here in Singapore, across to Japan, across to Australia. Guys, we've got to understand that there are risks in trading. Guys, so there's 2 risks every time you take a trade. You've got a risk of making money and losing money every time you push the button, which is very important. Guys, we are going to be trading on margin. So regardless of which product you use, be it a futures contract or a CFD contract, we are trading on margin. It does mean you borrow a little bit of money every time you take a trade. Now, what does that mean? Guys, we can make money really quickly, which is exciting. We can also lose it. So we've got to be acutely aware, guys, that leverage is a double-edged weapon, like margin is a double-edged weapon. So we've got to be very, very careful that we honor, guys, we honor the risk that is taken on these trades. So what I'll do is on each of the trades today, I'm going to show you what the risk was, and I'm also going to show you how to mitigate that risk. Effectively, how do we offset the risk is kind of a great discussion to be having. Now, I do have to mention, guys, I know there's a little bit long and tiresome, but everything tonight is general information only, and obviously the past performance of any financial product. We're no longer allowed to use it as a reference for future performance. Now, we've run through that. As for those of you that don't know me, as we were talking right at the start of the webinar, my mum calls me Lachlan when I'm in trouble. Everyone else calls me Lockie in China. And today I was referred to as Mr. Lucky because they didn't realize it was Lockie. That same thing happened in Vietnam about 5 years ago. Effectively, guys, my summary is really, really quick summary. I've been trading for over 25 years now. I come from a military background, so I'm a pretty straight shooter, if you don't mind the pun. What it does mean is at the end of the day, I boil trading down for what it really is. It's in the game of futures trading in particular. It's a game of buyers versus sellers, and the stronger team has to win. So all we do as a professional trading team, because we had more than 50 traders in the LTR today, all we do as a professional trading team is identify the team that's failing and join the other team. That's all we do. And that will become really, really obvious when we move into the charts in a little bit. Now, guys, I am famous for going over time with my webinars, so I have to be very, very strict on time tonight. I've got to make sure that everyone is catered for and everyone walks away with really good lessons. So my history, guys, my professional history in trading. 1st of August 2007, I discovered futures trading, guys, versus Forex. I was a Forex and CFD trader, but I switched, guys, as soon as I found futures. Guys, 1st of August 2009, I launched my first trading school in Australia. Now, I actually had to develop my own indicators and my own strategies. Ultimately, guys, why is that? I bought a number of trading courses. Guys, I worked out really, really quickly that what I was being taught effectively didn't work anywhere near as well as what it could. So coming from a mathematical background, I decided I would basically re-engineer the entire thing myself, which I did. So guys, in February 2010, launched effectively what we're going to be talking about tonight. The beauty of, guys, what we're talking about tonight is stair stepping and candlestick analysis. Has a huge history in the market, so I can go back and literally show you thousands of screenshots. There's an enormous amount of proof, guys, available in the live trading room every day that what we do works. As a result of that, guys, we can get on with the job of trading really, really well every day, and that's effectively what we've done today. 2011, guys, I did start speaking internationally. Effectively, I've had the opportunity to grow, guys, to now have a client base in 22 countries, which is really, really exciting. 2013, I got to actually work with Donald Trump, as Robert Kiyosaki, Richard Branson, T. Harv Eker, and the Wolf of Wall Street. When he was all the rage, when the movie was out, I get to work with all of them at a sort of an international speaking level, which was really, really exciting. Guys, in the end of 2023, so after this wonderful thing called COVID had vanished, what I did is I decided to sell my trading school in Australia, move to Singapore, guys, and on invitation, guys, had an opportunity to join Doro Day Trading in Singapore. And may I suggest, living in between Japan and Singapore is probably one of the most exciting things that I've done in a very long time. So I do recommend it. It's really, really quite exciting. Now, what we want to do, guys, what we want to do tonight is we want to bring our candlestick steps, or what we call our stair step. You quite often, I'll refer to as the step of the market. So I want to actually teach you about how to read the stair step in the market, but I want to do that in context with the European Open from tonight's trading. So what we're going to do, guys, we'll do a quick review of the live trading room trades from tonight. So I'm going to bring up a chart and basically show you these are the trades that were on offer tonight. Now, there are pros and cons to each of those trades, so I can run through those quite quickly. The target market is going to be the NASDAQ, guys, certainly for this beginner series of webinars, because it is a really, really great sort of really great market for the for junior traders to start on. Guys, what we're going to do is we're going to target a very, very simple signal set. So for those of you that know a little bit about what I do, guys, we're going to be waiting for the candles to close, and then we're going to be thinking about trading off them. And guys, ultimately, end of the day, we're going to come all the way down to the live trading room right at the end. And I want you to be able to tell me, why did Lachlan take the trades we took in the live trading room today based on the lessons that we're going to be learning today? Now, as I said, guys, everything is done on a live chart. I find live charts brilliant because, as I say, guys, on my YouTube videos that I put out every day, there's absolutely nowhere to hide on a live chart. Okay, there's nowhere to hide. You can't pretend. You can't go, oh, wow, check out this trade. So what I'll do is I'll bring up the live chart. Guys, I'm going to position that. I'll position that effectively over most of the screen. I want to do a very, very quick synopsis of what we did in the live trading room, as we're going to come back a little bit later on and pull this apart in enormous detail. But effectively, what occurred is let me put an arrow on the chart for you here. Here is the European Open. Literally right here, okay, is the European Open. Now, the beauty of the European Open, just like the US Open, just like the US Close, just like the Singapore Open, each of these trading sessions have nuances. So they behave in certain ways on certain days. So what I would suggest to everybody is, if you want to get really, really good at trading, I want you to master one time slot. So you might become the European Open master, the Singapore Open master, guys, whichever one works best in your time zone. Now, having traded, guys, the European Open, the US Open, and the US Close, I tend to find that they're all equally as much fun, as provided you get really, really good at your particular session. Now, you can see this is the NASDAQ, guys. The charts are running live. A very, very interesting observation, if I can make. As for those of you that are new to what we do, that candle there, that literally, can I call it mustard green? Guys, that little mustard green candle right there tells us the buyers are running out of steam. So what we want to do is we want to find any excuse to sell the market down and have a look at what the market is doing right now. All right, so we might actually come and have a play with this, guys, towards the end of the session, and we'll talk about what does that ultimately mean. Now, when I started the webinar tonight, as I said, we identify the team that's failing and join the other team. Guess what that candle says? The buyers are failing. So if the buyers are failing, which team do we want to join? There is only one other team called the sellers. So whereas at the moment, the NASDAQ is actually moving in quite a volatile nature tonight. Suffice to say, guys, what did we do in the live trading room? And we will break this down a little bit later on. As what we did for my more experienced traders, we waited for this. There's a theme here. So please listen. We waited for the sellers to fail on the opening candle, and then we joined the buyers. Okay. So that's for the experienced traders. For the slightly less experienced traders, we wait for the candle to push all the way up here. So we waited for the sellers to push down and fail, and then we joined the buyers. You see this theme continuing to occur. In this case here, this big one here, the trend changed direction. So and this is going to be beautiful with our stair stepping lesson tonight. Can everybody appreciate that this big green candle here, this big green candle is significantly larger than the candle before? So for the people that could carry the risk on the trade, we actually bought above that candle and let the market run up. For the people that could carry the risk on that one, we actually bought above that one and send that up as well. And then we came up here, guys, into this beautiful green line running across the screen here, and we picked up multiple reversal signals going back the other way. And this area, guys, I'm going to put a little square on it. This area here is where we're actually going to pick up one of the most valuable stair stepping lessons from tonight. And the beauty of it, that stair stepping lesson is on a live chart. So there's absolutely nowhere to hide. So what I'm going to do, we're going to leave that little yellow box there. I'm watching the time tick down. I must be on time tonight. As a I promised the trade. I'm a little bit joking, guys, but I said I promised the trading pit I'll do my best to be on time, because those of you that have worked with me before know that you probably know that I love to teach trading, but I tend to, when someone asks a question, it's like, wow, that's a great topic. Let's go and talk about that. So I'm going to try and be on time. I'm going to do my best. Now, in terms of Candlestick, what I'm going to do is I want to teach everybody tonight ultimately how to do candlesticks in terms of the stair step properly. So what I want to do, guys, I want to take everyone today back to 2007. And what I want to do ultimately is say, well, you know what? This is how I was taught stair stepping. Now, my trading coach, guys, an absolutely incredible guy in the US called Rich Malcolm. Guys, I've also got a trading coach in the US. She is absolutely incredible. She is still currently trading, guys. So Rich Malcolm, my first sort of major trading coach. He's the one that taught me stair step. So what I want to do, guys, is ultimately teach you what I was taught. Okay. Now the reason I say that, this classic saying, guys, from Rich Malcolm that I adopted when I did my first course, which is stair stepping is king, then price is the queen. So stair stepping ultimately defines for every one of you, guys, regardless of your trading discipline, be it CFDs, futures, Forex, stocks, whatever it is, guys, you can even grab all of this information and put it onto crypto if you really want to. Stair stepping tells you exactly what direction you should be trading the market in. So should you be joining the sellers? Should you be joining the buyers? And ultimately, if we can read the stair step, it's going to enhance your ability to trade the market really effectively. So what I want to highlight, guys, if I can, is the step is marked from the extreme high to the extreme low of a particular candlestick move. Right? So if the market moves up or it moves down, what we're doing is we're marking extreme high to extreme low. Now, one thing to say it, it's a lot easier to show you. So that's why tonight we'll spend a lot of time on the charts. Now, step allows you to identify ultimately who has the overall momentum advantage in the market. So what do I mean by that, guys and girls? I mean, if the buyers own the stair step, we want to be doing everything we can to join them while they're strong. So if the buyers own the stair step and they're in command of the market, we want to join them with the opportunity or with the intent of getting paid. Now, flip side, if the sellers own the stair step, we want to be joining the sellers with the intent of getting paid by the sellers as well. Until, of course, either the buyers or the sellers run out of steam. Now, key point here, if I can, guys, I'll read the third point down for you there. If the buyers own the stair step, most traders globally, kind of super important, right? Most traders globally will determine the buyers are good to join. So that's why you tend to find that if the buyers produce a really nice strong candle, people are going to be buying over the top of that candle. So a really strong buying candle with the stair step, everybody's encouraged to join the market. Now, can I show you an example of that? Okay, what I want to do, so back to the live chart, have a look at this candle here. Now, everyone's looking at that candle going, righto, Lockie, that's a really, really strong buyer candle. Absolutely correct. So is that one. So is that one. They're all really, really, really strong candles. Now, if you're looking at that going, well, Lockie, what makes them strong? I want you to use a really, really simple filter. Guys, and simply ask the question, Lockie, is that candle, so each of those arrows I'll put a candle on, guys, are those candles 2 to 3 times larger than the previous candles? That's the only question I want you to ask, because it's a pure mathematical answer. So in the case of the mustard green, is everybody happy that the mustard green candle is 2 or 3 times larger than this tiny red one? If so, it's going to attract the attention of the buyers. Guys, now mind you, we have indicators running on our charts telling us to buy the market above that candle and above that candle and above that candle. So yes, there are some cheats built into these charts quite deliberately. But the flip side, guys, let's just focus on pure mathematics. Is that green candle 2 to 3 times larger than the red one? Yes, it's an awesome buying opportunity. Is the next one up here, whoops, as I grab this one here, is that little green candle there, I say the big green one with the yellow circle on it, is that one 2 or 3 times larger than the previous candle? Once again, awesome. It's a great buying opportunity. And then the third one is exactly the same, a great buying opportunity. So I'm going to talk about that tonight, guys, in terms of trades that formed with the stair step. So the buyers own the stair step. We want to be joining the buyers when they're really, really strong. However, when they run out of steam, which has occurred in that yellow box we're going to come back to a little bit later, when the buyers are running out of steam, guys, that's when we want to say, you know what, I'm not joining the buyers anymore. I think I'm going to join the sellers and reverse the market. Now, ironically, everyone else around the world was thinking the same thing, which puts us in a really exciting place. Because if everybody's thinking the same as us, they're going to push our buy orders to profit really quickly, and they're going to push our sell orders to profit really quickly as well. Now, point number 4, guys, if a team owns the step, they are great to reverse against. So if the buyers own the stair step and they run out of steam, we want to be reversing against that and vice versa. So basically, we're joining the team that's really, really strong until they fail, and then we're dumping them when we're joining the other team. Doesn't sound very friendly, but it just happens to be really, really profitable, guys, if you are a professional trader, guys, trading futures. Now, I keep on banging on about futures. We won't get into the big discussion today about futures. I just want to highlight to everyone that's watching the video, the beauty of futures is it's a 2-team game only. Buyers versus sellers, the stronger team has to win. Now, in almost every other trading discipline, it'll be buyers versus the sellers versus the broker. And the broker controls the market moving up and down. So for a lot of traders around the world, guys, they might be, for example, trading Forex. Forex is buyers versus sellers versus the broker, and the broker moves the market up and down. So that's a 3-team game. Whereas futures trading, it's a 2-team game. I personally find futures trading a lot easier in my personal experience. Now, guys, understand all the way down the bottom, point number 5, understanding that step applies to all sizes of charts. Guys, if you look at what we're doing tonight on a 5-minute chart and ask the question, Lockie, could we do it on the 15-minute chart, the 60-minute chart, the 4-hour chart? Absolutely. Guys, you can do it on any chart. The lower the chart down to a 5-minute chart, the more accurate it becomes. So we are, dare I say it, the masters of accuracy on the 5-minute level. But you can also apply what we're doing to FX stocks and commodities, just to mention 3 of them. So stair stepping, guys, if we go back up to the title there, stair stepping is the king, price is queen. Guys, that works on all trading disciplines and all time slots. It just so happens, though, as a 5-minute chart trader, we're looking to master the accuracy in the market so we can get in and out of the market very, very quickly. So guys, how do we ultimately identify stair step? Okay, so how we identify stair step is we're basically going to be going down to the bottom of a candle, then drawing up to the top, and so on and so forth. When I go through these slides, guys, green is going to represent the buyers, red is going to represent the sellers, and obviously green is going to represent the buyers. Now, what we want to do, guys, let's learn to identify who is in command of the market and use this as a powerful hint as to the direction that you need to be trading the market. Now, I refer to this, guys, in my teaching as an ABC pattern. Right now, I know this for some of you, this might be new. For some of this, are like, oh, you're lucky, I get that. But if you're looking at this going, Lockie, how did you get the ABC pattern? It's literally just a stair step in the market, or what we refer to as a zigzag in the market. It's literally buyers push the market up, that's leg A. Sellers push the market down, that's leg B. And then the buyers took over, that's leg C. It's otherwise known as an ABC pattern, which I'll show you when we get into the charts. Actually, one of the most powerful trading patterns in the world. There's many reasons for that. In 60 minutes, though, we'll just focus on ABC. Now, in saying that, guys, exactly the opposite works as well. So in this case here, we've got an ABC pattern going the other way. What does that mean? The red, the sellers have pushed the market down. The green, the buyers have pushed it back up. And then the red, the sellers have pushed it back down again. Now, we can add a little bit more detail to this. Because what we want to do is we want to focus on that one there. So if you see that little ABC pattern, guys, you see the ABC pattern on the left, we refer to where the sellers sold down and failed, and the buyers, literally, if you want, you could call it the buyers, launch point, or the buyers burst point, if you want. That's where they burst onto the scene and took control. That is effectively called the buyer B point. Okay, so you've got the A and the B and then the C. Okay, and where the sellers failed, it's where the buyers took over, is called the buyers B point. What we want to highlight, guys, if we can, in a two-team game, the only reason the sellers failed is because the buyers were too strong. Okay, so the only reason the sellers ever fail on our markets called futures is because literally the sellers will fail because the buyers are too strong. Same, guys, when we flip the coin up the other way. If we're looking at this ABC pattern in control by the sellers, we've also got another key point here called literally the seller's B point. That's where the buyers failed. So if you can, guys, over there on the right-hand side, you've got this big sell down, so big sell down in the market. The buyers effectively tried to push back, tried, and failed. As soon as those buyers fail, all the sellers around the world go, ha, gotcha, and boom, we get C leg. Now, this ABC, guys, or the zigzag, if you want, or the stair step in the market, is not only one of the most powerful ways to read the market, it's a very, very powerful way to pick up very high probability signals, guys, regardless of where you are in the world. Now, tonight, guys, we're due to have people log in from Australia. We've got people in from Singapore. We've got people in from Portugal, Cyprus, America. Guys, clearly Asia. I do believe Malaysia's in here as well tonight. Guys, it doesn't matter where you are in the world. That ABC pattern on the left is a buyer-owned ABC pattern, and the one on the right is a seller-owned ABC pattern. Now, I want to build on this a little bit further by talking about some of the mechanics of this pattern. If the buyers are really strong, see this little line that I've put across on this left-hand pattern? If the buyers are really strong, they're going to crash through that point there called a breach point. Okay, they're going to literally crash through the breach point, which is really, really good fun. The same thing, guys, occurs on the other side. If the sellers are really strong, they're actually going to, what we say, complete the ABC pattern. Okay, so both of these patterns are complete. A, B, C. The C is quite strong. It's got above the breach point. That's basically the buyers saying to the world, we are completely in control. Get out of our way. Now, the beauty of that is most people go, wow, the buyers are in control. What do? They buy. Okay, we run the market up. We had a number of those opportunities today. Likewise, guys, with the sellers, if the sellers are dominating the market, dare I say it, let me have a look right now. The buyers are actually turning and coming back the other way. When the sellers dominate the market, like they did twice today, okay, so like they did in the yellow square, which we're going to go and break down shortly, like they've done over here as we came into the webinar, literally as the market has turned and started to run down here, the sellers have broken the buyer's stair step. So literally, it's as simple as this. If the buyers are running up, then the sellers try and fail, and then the buyers take over, this kind of stuff. If the sellers are strong enough to run down and break through that little point there, we end up with this beautiful thing called an M. Now, this will test, guys, how healthy your food is. Can anyone else there see an M for McDonald's? Okay, now I might make it a little bit more balanced and do that. Can everybody see the M for McDonald's? It's actually, now dare I say it, it's actually one of the most powerful reversal patterns in the world. So some of you might be able to see that little skewed M. Guys, same going back the other way. So if the sellers own the stair step, okay, so sellers push the market down, buyers push it back, and sellers push it down even further. Okay, that little point there becomes really, really important. Because if the buyers can push back through the chart there, guess what we end up with? We end up with literally a W. You could say a W for wealth, a W for wealth. The reason being, I could say the W for Woolworths, that's for everybody in Australia, but the W for wealth, guys, means that you've picked up an incredible reversal pattern. What are the percentage wins versus losses in the pattern? John, that is a really, really great question. So I kept a static, what we call a static bar reversal register until around about November last year, where we actually had 369 trades that we featured in our sample size. So we had 369 trades. We had 9 losses out of those 369 trades, and 5 were human error. So in actual fact, out of 369 trades, we had 4 losses. So you can do the math on that if you want to. Do the math on that. Suffice to say, guys, I stopped keeping 370. Ahmed has just corrected me, guys, 370 trades in the static bar reversal register. What I've actually done this year, because everybody, John, asked that question, Lockie, what is the signal success rate? Now, I've got to be kind of really honest with you, mate. If I David just got 24 ticks on the NASDAQ on a reversal signal. John, I've got to be really honest with you guys, and for anyone that's watching the LTR, because I am a futures trader, futures trading is significantly less complex than any other form of trading because it's buyers versus sellers, and the stronger team has to win. At the moment, guys, there's a beautiful stair step going on over here, guys, right now on the live chart. But at the moment, the sellers have sold the market down. They've got stuck in the trend indicator, and the buyers have just come back through and broken their stair step. Okay, in fact, you know what? Let me mark that for you right now, as I've just got to watch the time. Okay, so let's have a look at this. So they've sold the market down, they've bought the market up, and then they've sold the market down. So at the bottom of that little candle there, guys, you can say who owns the stair step. So big selling leg, little buying leg, big selling leg, sellers own the stair step. What are they doing right now? What are they doing right now? The buyers are breaking through the seller's B point. I'm not kidding. That's a live NASDAQ chart. Okay, I can't forecast what they're going to do. I can tell you where they're going to go though. Have a look at the slide behind you. Okay, so remember this seller B point just here, and have a look at what they've just done. So exactly right, Ahmed. Guys, it's a static bar reversal long, and I'm not surprised Dave has gone long, guys, and picked up 24 ticks on the NASDAQ. So I find that kind of funny, guys, because I didn't know the NASDAQ was going to give us a perfect step break right as we talk about it live in a webinar. I think that's kind of good fun. Ahmed, you did 150 NQ for the day. Well, that's amazing. All right. Got to be careful how much time I spend in the charts, because I'll run over time. So let me keep building. Let me keep building the background. Okay. Moving on, guys, moving on. Let's have a look at this. Comment down the bottom, guys. On the left, the buyers own the stair step. On the right, the sellers own the stair step. Now, you can either trade with the stair step. We call it an efficiency trade, or you identify the really strong candle and you trade with the step, guys, or you can trade against the step, otherwise known as a reversal trade, okay, which we're starting to get into. I want to build, guys, if I can, a little bit more on this ABC concept, if I can, with you to explain it a little bit further. I also want to teach you tonight, guys, how to actually read a step break. So quite often a team will break the other. You've got to be kidding. Did we just not see this on the NASDAQ chart? It's actually quite brilliant. So let me read the slide because I'll get distracted. Quite often a team will break the other step, offering reversal trades against this break. Now, of course, guys, we had a ton of them last night on the NASDAQ. We had a ton of them tonight on the NASDAQ. We've just seen one on the NASDAQ. Now, let me build this a little bit further, guys. Let me build this a little bit further. So Remember, we've got this, literally this B point of the ABC pattern. You guys, if you say, look, ABC, Lockie, it's a little bit hard, you could call it green, red, green. Suddenly everyone's like, oh my gosh, you could, green, red, green. But either way, guys, I call it an ABC pattern. Now, where the buyers have launched their C campaign is a really, really important point. It's what we call a step break point. It's actually just occurred on the NASDAQ live chart. So if the buyers cruise up here and they literally get to the top of the C and they don't give us a really good signal to go long, if the buyers can't give us a great signal to buy the market, we literally get ready to sell the market. Now that, guys, there is referred to as a step break, where the sellers have actually shot back down and broken the buyer's stair step. Now, the moment they shoot below that ABC pattern, guys, the buyers have lost control of the market, the sellers have got control, and what we want to be doing is we want to be joining them, guys, with the intent of getting paid. So ultimately, guys, little comment down the bottom, guys, as I move your chat log around. Once the sellers break the buyer's step, we can hunt reversal trades in favor of the buyers or efficiency trade in favor of the sellers. What does it mean? As we wait for the candle to close, so for those of you looking for like a really, really high consistency with your trading, we wait for the candle to close and then we ask the question, is that a valid sell signal? Awesome, I'm going to join them. If it's not a valid sell signal, fantastic, I'm going to look for a reason to buy. So we can, as a 5-minute chart trader, we can make that decision every 5 minutes, which means we can end up with a lot of trades, guys, on a daily basis. Pros and cons. A lot of trades, guys, we've got to be careful that we don't trade over our daily KPIs. The beauty of a lot of trades, though, is we get a lot of choices and we can actually grab the perfect trade, if you will. Now, building on ABC, guys, building on ABC a little bit further, exactly the same thing, guys, applies on the right-hand side. So if the sellers control the stair step on the market, then the buyers shoot back through and they break the point, which has just occurred live on the NASDAQ. Let me show you. Okay, so in fact, let me move it a little bit over here. Okay, so can everybody see? There's the sell down, there's the buyback, there's the sell down. So we can see that on the live chart. Okay, back to the slide. The buyers have cruised through, broken the step break point. What does that mean? You can join the buyers and run them long. And look at this, guys, right in front of us. Guess what's going on right now? The buyers are failing to get above that 38 Fibonacci right there, the big green one. So guys, for everyone in the webinar, doesn't matter where you are in the world, even if you're watching YouTube, if the buyers are failing to go up, we're getting ready to join who? Who are we going to join? Guys, we're getting ready to join the sellers. Now, the beauty of that is we can make this decision every 5 minutes as a 5-minute chart trader. Okay, guys. Is everyone watching what's going on here? Louis, I know you're in the webinar with us tonight, mate. What's the bet? That's a 76% Fibonacci failure. Would anybody like me to show you that? let me show you. I'm going to jump on this chart. I'm going to draw a Fibonacci down to catch them on the way up. And hello. Hello. Where did the NASDAQ just fail? Exactly, guys. They're called the evil twins, guys. They are just amazing. Look at that. You know, guys, you know what I really enjoy? You know what I really enjoy about live charts is that if that didn't work, it would make me look like a fool in front of everybody. And yet, ironically, I've been presenting, guys, on live charts since I started in really, really getting a traction around what I was doing, guys, in 2009. I love live charts because there's nowhere to hide. Now, again, guys, over there on the right-hand side, once the buyers break the seller's step, we can hunt reversal trades in favor of the sellers, or we can do efficiency strong trades, guys, in favor of the buyers. So we can run with the market in either direction. Guys, it doesn't matter what occurs. We just got to wait for the candle to close and then, guys, judge the trade. Now, I'm going to build this, guys. I'm going to build through this a little bit further and a little bit faster if I can, because I've got a really, really awesome little point to show you. That's a really awesome point to show you. On the left-hand side, guys, you've got that beautiful ABC pattern. What I've done is I've put a little gray box or a little black box around there, because if the buyers do, if you watch my hands on the screen here, if the buyers push through and they can't push up through a known area like what we just saw, the market is going to turn. So guys, just because we get a really lovely ABC pattern, if that ABC pattern is straight into a brick wall or a pivot, instead of going, wow, we're going to join the buyers and go nuts, we actually say we're just going to wait for the buyers to push up and fail, and we're going to join the sellers and drop it back the other way, like what just occurred on a live NASDAQ chart. So typically, guys, you get into that little black box, which is effectively a reversal zone. If we pick the right reversal zone, which is very easy to do with a little bit of training, the market shoots down and we end up with a really, really lovely signal, which ironically has just occurred on the NASDAQ. Now, the flip side of that, yeah, Ahmed, a higher high is absolutely incredible. By same on the right-hand side, you've got an ABC pattern down. If these guys fail at a known area, like a pivot or a really, really strong support and resistance level in the market, all we do is wait for the sellers to push down and fail, and then we join the buyers and we literally run it back through, and we actually run it back through the step break point and then keep running it higher and higher and higher. It ends up, guys, producing very, very high probability, low risk, high return trades. So you end up in a trade with maybe $100 at risk with the intent of making $500 or $600. Guys, you don't have to do anything fancy there. You just wait for the market to fail. Okay, now, obviously, a little bit of expertise there. We wait for the market to fail, and then we simply join the other team. Okay, so what did Rich Malcolm tell me, guys, in 2007? Identify the team that's failing and join the other team. That's all we're doing. Now, seems simple, right? It was taken about 17 years to master, guys, to master how to do that really, really, really well. Okay, now I want to build on this, guys, if we can. I'll build on this, I'll bring up a chart, and then we'll go to the live charts. So, guys, if you can read the stair step of the market, you can take advantage of the step in both directions. So all great trend trades, are traded with the stair step. All great reversal trades are traded against the stair step. Now, the reversals, guys, do generally offer the best risk to reward ratio. There is no question about that at all. All great continuation trades, guys, are traded with the step and the trend. We actually had a number of those tonight, guys, in the live trading room. Now, the rules, guys, as I show you how to mark the step, the rules. Step is marked using the rule extreme high to extreme low of the candles that are presented to you. The team with the longer leg tends to own the step. Now, guys, if you're looking at this going, Lockie, are these trading rules? They are trading rules. So, guys, if you want to take a photo with your phone so you can remember this, because I've got to move through it quite quickly. So rule number one, guys, step is marked using extreme high to extreme low of the candles present. I'll show you that on a graphic, then I'll show you on the live chart. Guys, the team with a longer leg tends to have the step. A higher high or a lower low when comparing the most recent candle to the candle before is how you identify the step. And finally, guys, the moment the sellers touch the buyer's step, which is that B point we were talking about, or vice versa, the moment that occurs, the other team basically grabs the step. So remember that ABC pattern up, the moment the sellers come down and touch that B point, the buyers have lost control of the market and the sellers will normally tank in and have an absolute ball, guys, and vice versa. Now, building on that, guys, this is the LTR, guys. This is the LTR from the 30th of April. Okay, now 30th of April, only 2 nights ago. What I'll then do is I'll do a graphic on this one, and then I'll actually show you how to draw the stair step here. We'll talk about some of the trades we took, but then we'll go to the live charts and do it live. Now, for those of you that don't know these charts, guys, if you're relatively new to Doro, that big colored band running through the actual chart is our trend indicator. Effectively, for junior traders or beginner traders, guys, when it's red, we only want you selling the market until you get a reversal signal. Okay, when it's green, we only want you buying the market until you get a reversal signal. So it's basically red and green. Occasionally it goes gray, guys, like it's done in the middle. If it goes gray, effectively the market has no direction. So ultimately you have no direction. So wait for the market to effectively wake up again, and off we go. Now, guys, over there, we do have a little bit of a cheat going on. The extreme volume candles, they're orange, or you see that mustard green color. We've got to be a little bit careful, guys. If, let's say, the sellers are using too much volume, the market is likely to reverse. Same, if the buyers are using too much volume, the market's likely to reverse. So we use that as like an early warning system about what direction the market is likely to go in. You'll see solid lines across the screen, guys. They're Doro pivots. So just to warn everybody out, our pivots are different to other trading schools around the world. There's no question about that. Just to let everybody know, we use the same trading pivots as Macquarie Bank in Sydney. That's where I did my base training as a trader. So guys, we still use the Macquarie Bank pivots, and they're literally the most accurate in the world. Over there on the right-hand side, you've got your price scale. So that's effectively, we just determine what price we're going to be buying or selling the market. Okay, now, moving a little bit further, guys, with the graphic, what I'm going to do on the left-hand side, so extreme left-hand side, I've drawn a little red arrow to show you that the sellers have pushed the market down. I've then brought a green arrow up, buyers pushed it up, and then a big arrow down. Okay, now, guys, remember before I said in terms of the rules of stair stepping, generally the team with the bigger leg owns the step. Okay, so everyone look over there on the left-hand side, you're probably looking at that going, well, Lockie, it's pretty obvious, right, that the sellers own the stair step there. Absolutely correct. Guys, so let me build this. At this point in time, or at this point, so let me start again because I want to read off that little paragraph down the bottom there. At this point in the charts, the sellers own the stair step. Okay, the extreme volume candle, that's the orange candle, says that the sellers are using too much petrol or using too much volume in the market, and they are highly likely to fail. Once the market locks in a reversal signal, the market is likely to turn around and go straight back the other way. Now, for those people that have studied what I do, there's 3 reversal signals there. Okay, there's that little -2 rated static bar reversal. There's another static bar reversal, and then there's a 4-point turning bar. Now, that might sound like double Dutch for those that haven't done what I do, guys. But if you are in the live trading room, guys, every single one of those signals are going to draw our interest. Now, for those of you looking at the 4-point turning bar, that really, really big candle there with the number 3 underneath it, saying, Lockie, you can't trade into a pivot. Absolutely correct. Wait for them to close over the pivot and then take the trade. Okay, now, as you can see, guys, that's exactly what's occurred. Mark, is that a 15-minute? Mate, that is a 5-minute chart, this one. That's a 5-minute chart. Now, I don't, W-A-O-T, mate, I don't know what that is, a WAOT. I never actually, oh, it's a 15-minute wait. No, sorry, mate, sorry. I'm just thinking, what's it? Geez, I don't know what a WAOT is. I've been around trading for a while. So is that a 15-minute wait? So what you're actually doing is you're waiting, in this case here, mate, what we would do, John, we would wait for the European market to open and then take the trade. So you can see the European, literally European pre-market. If you're a pre-market trader, you would take the trade. If you're a European open trader, you would wait for them to come back down and then take the trade. Okay, but let me just build this chart a little bit further, mate. It'll become really, really obvious. So guys, I'll get rid of those little red circles for those that have clearly studied what I do before. For those that haven't studied what I do, we just mark the stair step in. All right, so can everybody see you've got a big green one or a big green arrow there, but it's not as big as the big red one. Okay, what does it mean? The sellers still own the stair step. Okay, now, in saying that, right here, nice little comment for you. Please note that there is no lower low in this buying dominated move. So what that means, guys, can everybody see that big run of green candles that's run all the way up there? At no point in time has a candle spiked below the previous candle. Okay, that's otherwise known as a lower low. So you see, every time we got a candle there, it's just literally buy a candle, buy a candle, buy a candle. No, the sellers haven't even shown, guys, at that point in time. Now, ultimately, the sellers only showed in the market when we got that little spike down. So can everybody see? I'll take that little circle away. So we've got no lower lows the whole way up here. Then the moment the market is sold down, we've got this really obvious lower low. Now, what does that mean? It means we draw our stair step off that lower low. So as I put in the comment at the top, guys, the candle here with the black circle is the first candle to create a lower low. So we can now draw our step. So we continue to follow the rule, extreme high to extreme low, and we mark the stair step accordingly. What does that mean? I draw my little red down because the sellers push the market down. I then find the next extreme high and I draw my leg up. Okay, so can everybody see what I'm ultimately doing here? I'm waiting for an extreme low and I'm drawing the arrow down. Then I'm waiting for an extreme high and I'm drawing the arrow up. Now, interesting point, guys, as I put in text on the screen for you there, we can then seek to find the next extreme high and mark it accordingly. Now, when we mark this step, you will be able to see that the buyers have taken the step from the sellers. Now, once the buyers have taken the step from the sellers, guys, we either look for really, really strong buying candles going up, or we look for reversal signals going back the other way. Now, for many of you looking at that, you say, Lockie, isn't that tiny little red candle underneath that black circle, is that not a reversal pattern short? Absolutely it is. It's, in fact, you know what? It's a static bar reversal short. Fancy that. So if we can't go up, guys, with the stair step, we can turn around and send it back the other way, otherwise known as a reversal. Now, in saying that, which has the better volume, the pre-trade or the open? So, John, great question. The open will always have the better volume. There's no doubt about that. But when it comes to the European Open, the European pre-market is the close of Singapore. So when you see this really, really nice movement running into the European Open, that's because the Singapore markets are closing. Okay, that's why it's going really, really well. Now, that is actually, guys, dare I say it, they traded very, very well today as well. Now, I'm going to keep this exercise going. So right there, as everybody knows, in the red circle, as we've clearly got a reversal or a series of reversal patterns as the market falls back down. What I've then done all the way down the bottom, guys, I put the little black circle because that is literally our next point of extreme low. So I'm about to draw the step down. But what I wanted to highlight, guys, remember that step break slide that I developed for you? That little black rectangle there is the break point, okay? So if the sellers do decide to turn and they fall down like they've done, like that, then guess what we've got? An M for McDonald's. What is that? A reversal pattern. It's like a really, really quite high-level strategic reversal pattern. Mind you, for us, we've picked up multiple reversal signals on the way down there, guys, either really, really efficient, strong candles or the static bar reversal, and there's also a 4-point turning bar there as well, okay, for those of you that know those algorithms. Now, guys, I want to build on this a little bit further, and hello, little yellow box down the right-hand side there, guys. I want to look at the live charts from the live trading room tonight. Now, I know we've been here already, but let's go back, guys, and I want to draw on these charts a little bit more. Okay, let me draw on these charts. In fact, I'll tell you what I'll do. I'll go full screen with the charts because we don't need the slides any further. Okay, don't need the slides any further. Let me get rid of this paraphernalia over here. I was going to write you a homework slide. So I was going to write your homework slide. Your homework is to do the following. But then I thought, you know what? You guys are all adults. So, guys, I'm going to tell you, your only homework, guys, off the back of today is go and watch the YouTube short video, guys, that I'm about to put on YouTube about what we did in the live trading room tonight. There's about 90 shorts on YouTube now. Guys, so that's homework item number 1. Guys, homework item number 2 is please come to the 3rd webinar in this series, which is this time, guys, next week. Guys, and I'm going to be building on what we did last week, which is candlestick analysis. Today, we're doing stair step. Next week, we're going to build on that even further. Guys, and the reason being is over the next 9 or so webinars, we're just going to build your expertise more and more and more and more with the intent, guys, that you look at this and go, you know what, there's something really awesome going on here. As I get rid of all this detail on the chart, there's something really awesome here. I need to take advantage of this. Okay. Now, I wanted to focus, Remy, hello, mate. Hope you're brilliant. I wanted to focus, guys, on this up move here because not only is the stair step really, really easy to teach, but there's also a series of reversal patterns that we can talk about. There's also some trading rules that we can talk about for everybody. So what I'm going to do, guys, as I was doing before, I'm going to put a circle here, okay, where I've got an extreme low. Okay, I'm going to draw a circle here where I've got an extreme high. I'm then going to draw a circle here where I've got an extreme low. I'm then going to go and draw an extreme high. What am I actually doing? Okay, so there's my low. Okay, literally, guys, is anyone old enough? I'm a little bit old. Is anyone old enough to remember join the dots? Everyone, so all I'm doing is I'm joining the dots. So let's have a look. Okay, I'm going to draw the line up here. Someone's old enough to remember that. I'm going to draw my line down here. What am I doing? I'm drawing the stair step in the market. I draw the line up there. Now, the little lower low is there, so I can actually bring this across to here, okay, and then bring that down to there, okay. I'm going to borrow that extreme high. I'm going to put him there, guys, and then I'm going to, obviously, we've got another one hiding there, so let me do this one. I'll move that up to there. And what am I doing, guys? Remy invented the dots. I love it. So can everybody see, guys? Can everybody see here? We've got this beautiful stair step in the market. Okay, beautiful stair step in the market running long. Okay, absolutely brilliant. Now, let's have a look, guys. So we all know that if the trend is up like this, so clearly it was up, it was really, really green. Every time we get a strong buying candle, if we can hold the risk on the strong buying candle, we're allowed to buy the market. If we can't hold the risk, guys, we've got to wait for a valid reversal. Okay, so I'll take all those dots off, guys. We know how to mark the stair step. So all I've done, extreme low, extreme high, extreme low, extreme high. That's all I did. Okay, now, what does it mean, guys? On the way up, I'll circle the big candles. So we've been here before, but that candle is 2 to 3 times the size of the previous candle. It's also got a strength rating of 4. What does that mean? As if you buy above that candle and sit on it for 15 minutes, you're likely to get very well rewarded. Okay, so let's have a look. 10, 20, 30, 40, 50. It went more than 50 ticks or $250 in your favor, guys, in 15 minutes. It's clearly gone higher than that. Okay, not too bad. Now, in this case here, guys, we get another really, really strong candle, that one there. So again, if you traded this candle, which means you enter over the top of the candle and wait 15 minutes, which is 1, 2, 3, the candle is positive, hasn't stopped you out. If you waited one more candle, it's clearly gone a very, very long way into profit. Okay, that's a slightly more advanced way of doing it. If you're a junior trader, guys, or somebody that wants to nail consistency on the NASDAQ, you would simply just go long, guys, for that square, which is $100 US. And you say, all right, Lockie, thank you very much, I'm done. You'd take that one long for $100 US. Thank you very much, I'm done. You would take the next one, guys, long for $100 US and say, I'm done. Now, guys, I know I sound like a broken record here. Okay, I sound like a shockingly broken record. However, every single one of those candles has a strength indicator underneath it saying, buy this candle. But if you're looking at it going, well, Lockie, that's kind of cool, but these buying candles are significantly stronger than the other candles. What are you doing? Because you're buying the market with the overall momentum, which is called the stair step. You're literally buying the market with the stair step. So guys, that's purely like, well, so what do I do there, Lockie? I said, well, you buy the market above the candle, you put your stop loss below the candle, and you just let it move up. Right. Is there any complexity? No, there is no complexity until they run into a brick wall right here. Okay, they've run into a brick wall called a Fibonacci off the 4-hour chart. Exactly right, Jeff, with step and trend. So guys, we've got the step, we've got the trend. Every single one of these candles, guys, in the LTR today, I said, guys and girls, you're allowed to go long over the top of that candle, provided you can carry the risk, because risk is important, guys. As it turns out, the algorithm, the mathematical algorithm, killed it on the NASDAQ today. Absolutely killed it. Now, if you want to reverse the market really effectively, guys, if you want to make that, now, interesting point for the junior traders. If you waited for every single one of those candles to close and then entered, you're running at 100% strike rate. Awesome. Can everybody see this big red candle here is the first time the sellers have shown strength in the market? Okay, right there. Now, if you're looking at that, you're saying, well, Lockie, they've come up here and they've failed at the brick wall, and we've got this monster red candle. Can everybody appreciate, guys, the monster red, let's call it monster red, the monster red candle is significantly larger than the green candle that's leading in. Is everyone happy with that? What does it mean? The vast majority of the world said, we are going to sell underneath that candle. That is our reversal candle. Now, some of you are probably looking at that going, but hang on a second, Lockie, hiding in there, you've also got a -4 rated static bar reversal. 100% we do. Guys, can everybody see that -4 right there? What does it ultimately mean, guys? It means that everyone else around the world can see the buyers are failing. So what we're going to be doing is, instead of joining the buyers, we're going to be joining the sellers and running back down the other way. So where's the large light green candle on the right-hand side would set up as a buy above and didn't trigger. Ah, mate, great observation. So guys, where's the set over here? So this big candle is a buying candle, but because the buyers couldn't buy above the candle, we wanted to sell and go back the other way, 100%. If the buyers can't buy above a strong candle, it means who's waiting for them? The sellers. The market turns and falls. So what I wanted to do, guys, is highlight this particular point. Let me get rid of some of the chart stuff here. Because if you just said today on the NASDAQ, all right, Lockie, every time we get a strong candle and they own the stair step, I'm going to buy the market. Well done. You've done very, very well. If you then said, I'm going to wait for the sellers to prove they are in command, which is the strong red candle, and then I'm going to sell the market and wait 15 minutes. Guys, the magic 15. So it means you got in on that candle started to go to profit. This candle, you're 15 minutes into your trade, guys, and let me ask a really cool question. Are the sellers starting to get control of the market? Now, how do you know that? So we'll have a look at the size of the red candle versus the little green one. Guys, is this red one 3 times bigger? What does that mean? Sellers are coming, so just wait. Is this one bigger? Sellers are coming, just wait, and just goes boom, 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 all the way down. The magic minute numbers for other markets. Oh, Tunde, on the 5-minute chart, we focus on 15 minutes. That's called otherwise known as the rule of 3. Okay, otherwise known as the rule of 3. Okay. So guys, what we've got here, if I can be so bold, guys, I've literally run out of time. On the way up here, everybody now appreciates if we marked our stair step from extreme low to extreme high to extreme low to extreme high. Every time the buyers said, I'm really strong, guys, which for everyone that knows what we do, it's a convincing candle. Every time we got a convincing candle, if you had have entered above the candle, you would have been paid. Flip side, John, my lady coach, her name is Erica. Now, in saying that, she is a very highly sought after American prop trader. Okay, so she's a professional prop trader. So she's actually asked for me not to use her surname. She will smile when she sees this, but she says, Lockie, please don't use my surname because I don't want to be contacted, please. She knows these webinars are going to go global, man. She doesn't want to be hounded because she's a very, very good trader. But guys, that being said, everybody appreciate we had the stair step on the way up. So we joined the buyers when they proved they were strong. So Nathaniel and all the junior traders, we waited for the candle to close and then we took our trade. When the buyers ran out of steam, guys, at the top of the chart, we waited for the sellers to show us and prove they were strong, and then we took the reversal signal. We waited 15 minutes, strong seller candle, wait a little bit more, and boom, 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 straight down through the profit target. And for those guys, I always get someone in the webinar that says, but Lockie, what about a 1-to-1 risk to reward ratio on that reversal trade? Brilliant. If you base your risk control, guys, at the top of the chart above where they failed, you would simply have gone short for exactly what you risked. Now, with a little bit of training, instead of carrying that much risk, as you can put your stop loss behind this retracement plus around about 10 ticks. So you're carrying 1, 2, 3, 4, around about 45, guys, around about 45 ticks at risk, but you can still go for the long range target, which is 10, 20, 30, 40, 50, 60, 70. So guys, you've got around about $200 at risk to make $350 US. And naturally, as that trade starts to move in your favor, you can actually reduce your risk to 0 and still let your profit run to $350. So guys, I wanted to finish on time. I'm very, very close to on time. My key lessons, guys, to everybody tonight. When the buyers own the stair step and they're strong, we want to join them. Okay, when the buyers run out of steam and the sellers give you a nice strong candle, just get ready to sell the market and basically sit on it for 15 minutes and let it drop back down. Guys, if you had have followed that stair step mentality tonight with that risk control and that target strategy as well, guys, you would have had 100% strike rate on the NASDAQ again tonight. So what I want you to do is please make sure that you've got enough money in your account to take these trades safely. Guys, and for those of you that are looking to trade really, really well, really, really quickly, guys, just wait for the candle to close. Determine if they're strong. If they're strong, join them. If they're not, get ready to join the other team. And again, guys, as I said, 9-part webinar series. This is part 2. Thank you to the wonderful people, guys, at the Trading Pit for having me, guys, and allowing me to go global, guys, out of young Japan and Singapore. It's very, very exciting. For those in the live trading room, guys, I'll see you tomorrow night for our Friday night session. And guys, wherever you are in the world, I wish you the most incredible, guys, amount of luck as a trader. It's very, very straightforward. Guys, just follow through this 9-part webinar series. Guys, you should be able to pick up what we do relatively quickly. And guys, naturally, if you want to, guys, in time, you can jump into the live trading room and we'll do all the heavy lifting for you. How about that? So, Louis, thank you, guys. Thank you for the thank yous. I really, really appreciate it. It's been a very long week. And to get that many thank yous off the back of a webinar clearly means, guys, we're moving in the right direction. Your homework, guys, we've got 7 webinars to go, and jump onto the YouTube short. It'll be up there in about half an hour. And that will reinforce again, guys, exactly what we did in the live trading room again tonight. So the Trading Pit, thank you very much for having me. I'll see you guys in the webinar next week, guys. And for those of you that are watching YouTube, guys, absolutely. Oh, can we post the YouTube link again, please? Oh, that's a good point. So go to YouTube. So, but if you want the YouTube shorts, so if you want last week's recording, just go to YouTube and go to the Trading Pit, literally the Trading Pit. Guys, if you want the short videos, then just go to Doro Day Trading. Okay, so you've only got 2 YouTube channels to go to for the next 7 days. All right, guys, have a great night. Well done, everybody, wherever you are in the world. And I'll see you either in the webinar, guys, next Thursday night, guys, or I'll see you in the live trading room tomorrow, and we'll do the Friday session, guys, and let's see how we go. It should be really good fun. All right, I'll see you guys soon. Cheers, and bye for now. Bye, bye, bye.